day all. Ira Epstein of Linn and Associates with your metals market wrap-up, and this is for Wednesday, the 22nd of January, 2020, just getting on to 4:10 in the afternoon. Now, I want to remind you that I've got a gold and, that I have a SPDR and ETF report that covers GLD, GD, the different miners and so on, SLV. It's all there. It's on YouTube right in this series that you're looking at. It's called Ira's SPDR ETF video. So you might want to take a look there if you're watching what I call these important markets right now. Now, while we finished down in the gold, $1.20, the last trade of the day was actually over 1564. Silver was up a few cents from here. Copper's been in the doldrums, to be expected. The situation that we have going on right now with the, let's call it the Wuhan coronavirus, has gotten much more serious. They have quarantined now the city of Wuhan. In other words, let me define their definition of quarantine. There is no plane or train travel in or out of the city now. You know, the next step is military quarantine if they can't get control of everything, so you always pay attention to that. There's over 540 cases now, so each day I talk to, it's going up over 100 cases a day, 17 deaths. That's almost double from the amount yesterday. This is not a pandemic. We don't know what it is yet. So you've got to pay attention. The World Health Organization talked about that today, and they're going to have another meeting tomorrow. I mention this all because it's going to play with the gold and the silver. People get nervous. What do? The copper market coming down. Energy's getting smashed on this as China, one of the world's largest consumer of energies, has two events going on. Certainly, this coronavirus is hitting everywhere. Beijing got its first cases of it, they announced today. The second thing you have is the lunar holiday in China. So you get all this coming at one time. Factory shut, demand falling down here. That's the way to look at it. Let's go to the chart, though, of where we're at. For this whole move, gold has given up basically, it's 1550, 670 from the 1560 level on a closing basis only, down $3. That's not bearish. The market's consolidating from the looks of it, this move at this point. When I come to the daily bar chart, we peaked on Missile Day. I keep talking about that, and this is what I'm going to label it. That was the day that the Saudis sent the missiles into Iraq. It, I think, screwed the charts up. And the reason is you took the market way up, and since then it came back down, filled the gap, and has just gone sideways this whole period. Again, it's consolidation in some terms. You have a pattern of a higher high, and because of yesterday's deep break low, a lower low. And remember, part of yesterday's was getting this information and trying to digest all that is going on with this coronavirus. So we're flat, if you will, in the momentum. The market is held on and did hit finally the 18-day average of closes, which I said to you it owed when you lost what we call an embedded reading. The market has neutralized that, and it's been able to stay over it. Now, should you close under that 18-day average of 1553, then you could get nervous that maybe you're going to extend a bit further to the 100-day average or the closer of a Bollinger Band. And the Bollinger Band today crossed over that number. This is how you looked yesterday. It's going to come racing at prices, both from the top side and the bottom, if you stay going sideways. That's going to be what I look for temporarily. Momentum-wise, when you had lost the embedded reading all the way here, that was when I told you, I think price in the 18-day average, if you don't get back the embedded reading the very next day, which it did not do, could make a run at each other. Now, there's a definition of a run. Do they exactly hit each other or not? More times than not, they do, but I can't use the word always, just not, wouldn't be accurate. It took a while. It took prices to rally, but you finally did it, as you can see. Okay, big deal. All I'm saying is consolidation is the key phrase here, but I'm still longer term on these charts friendly. The gold-silver ratio still favors gold over silver. And you know that when you're over this 18-day moving average of closes. You say the bias is up. You now need 87.32 ounces of silver to get an ounce of gold. That's way beyond numbers that we talked about years ago of 30, 40 to 1. In the silver market itself, yesterday you fell into the 100-day average and the lower Bollinger Band. That is often what I tell you is a zone that the pros take money off the table. The first challenge of a Bollinger Band on the upside or downside is one of the things I teach that I think that's where pros are going to step part of their positions out of the market. You bounced a little from there. Okay, not bad. Oversold, consolidating, paying attention to those two numbers. Nothing yet bullish. Copper today reaches down, gets to 276.35. Now you are in the zone of that lower Bollinger Band. So I'm in an area where I'm looking for support in this market. Maybe it's overdone itself, falling now in the neighborhood of 12 cents a pound. That's quite a bit of a break, and it's happened in 72 hours. If you think that's not from the coronavirus, fine. I happen to think that's part of it. In the platinum market, overbought market that, well, actually today it's still overbought. You got a 70 reading, lower highs, lower lows. You stepped out of the uptrend. There's one metal that's in a runaway mode. We've talked about it over and over here, and it is your palladium, up $102 an ounce. Monster money, embedded reading. You know that that's my favorite part. Higher lows, higher highs. You're not back over the upper Bollinger Band. I look for it to get under it shortly. But this is a squeeze play. You've got world hope that economies X this coronavirus are going to see a pickup in demand, that auto sales are going to pick up, and until they tell us that they can substitute platinum for palladium in gasoline engines, which they claim that there's a number they can do it at. I don't know. This just keeps getting squeezed because you have less supply of this. You're going to run into a deficit this year, according to the miners that mine this. When I look at the dollar index, the market is stuck at the 100-day average of closes. The momentum is now embedded. If you get the red line to close under 80, I'll look for the market to pull back to the 18-day average. Should this market get nervous and start on the upside again and be able to get through this with any real momentum, remember you finished today 97.29 under that 100-day average, well then you can look for the upper Bollinger Band. So many people have been bearish this dollar, the president included, of the U.S. wants it lower. The market just isn't accommodating people. So you pay attention to all that. You try to figure out where to go, and that's where I try to come in with you. If you're like me, you question your trade selections. Do you think I don't read others' newsletters? I do. I have those that I like to read. You know, you don't know everything. How do you what I spend my day doing? What do you think I do? I read an awful lot. Not the newsletters for Trade Rex, as much as thoughts on the market, where they might go. Then I'll go to certain people for their trade ideas as to what's going on. I want to start you off that way each day. This morning I happened to get up at 4 in the morning. I was recording by 5:30, and this is what it looks like. My analysis will be in the mornings on charts that are black, and these colors come flying out at you. We cover 40 charts on the futures. I no longer do the 5 on the ETFs. They're at the end of the day video and the afternoon Spider ETF video, which is for subscribers. By the way, that is yours free to try, whether you've been a past subscriber of mine or not. If you'd like to try our Spider ETF video, go to our website, sign up for it. You'll see it on the bottom right. Be happy to put it in your hands. The free offerings on that will come to an end soon. But I'm going to give you each morning the technical analysis. I'm certainly going to talk fundamentals because I've read them from Asia to Europe and I'm able to speak intelligently on them. Doesn't mean I've read everything, but I have an idea of the main points. I'll give you then from the chart analysis where to get in, where to get out. Where would my analysis be totally off base and wrong? Yes, I'm going to be wrong. And what the profit objectives are, because at times I'm going to be right. So you get to play with both of it. And that is what my subscribers see. It is not something you're going to get on YouTube. So if that's the case and you think this might fit in, these are the areas in the morning that I cover. And yes, you need not watch this whole video that's typically about 15 to 20 minutes long. You just pull a scroll bar on the bottom and it drops you off in the section and it tells you what section you're in. And that's how the Spider ETF video now works too. There is a cost for it if you decide to subscribe to it. That cost is $7.95 for the first 30 days. It will include, to begin, until I decide to start charging for this Spider ETF video, that as well. Then that will have a different subscription down the road. How do you get all of it? Go to our website. Go under the word research. It explains it all. You can always sign up, as I said, for any of our free offers on the right-hand side. And for free offers, you can click here. It'll take you to that area too. I'm Ira Epstein. You have a great day. Talk to you tomorrow.